Welcome to the Opening Bell Report.
Usually when I see a headline screaming something like, U.S. government bets $1.6 billion on one stock, my internal spam filter just goes crazy.
Oh, yeah.
It sounds like the worst kind of financial clickbait, right? Like something you'd see in a sidebar ad.
Absolutely. One weird trick, yeah.
Exactly. But we have a stack of documents here today, specifically an analysis report dated January 28th, 2026, and it suggests this headline is, well, maybe even an understatement.
It really is an unprecedented moment, and you're right to be skeptical of that word bet, because a bet implies a gamble, a roll of the dice. What we are seeing here with the Department of Commerce and USA rare earth ticker USR, this isn't a gamble. It's an architectural shift. It is the government looking at one company and basically saying, this piece of the puzzle is too important to leave to the free market alone.
And that is the core theme we have to explore. This is not just a mining company getting a loan. It feels like what the report calls a validation event.
That's the perfect term for it.
But before we get carried away, we need to understand the mechanics. We have this huge number, $1.6 billion.
Yeah.
We have a hidden private investment that happened right after, which I think is fascinating.
Oh, that's key.
And we have some pretty complex chemistry that explains why this company and not another one.
Exactly. We need to unpack that deal structure first. Then get into the science, the difference between light and heavy rare earths, and then look at what it all means for an investor.
Okay, so let's start with the money. $1.6 billion. It's a staggering amount for a company that isn't exactly a household name.
Not yet, anyway.
But in corporate finance, not all money is created equal. I think a lot of people see a number like that and assume it's just revenue, but this is structured very specifically.
It is, and if you're an investor, this distinction is everything. The report breaks that $1.6 billion into two main buckets.
Okay.
The first bucket is $277 million, and that's a direct grant.
A grant. So just to clarify for everyone, that's basically the holy grail of financing.
It's the golden ticket. It's non-dilutive capital.
Right.
In plain English, it's free money.
Free money.
They don't have to pay it back. They don't have to print more shares to get it. It goes right onto the balance sheet.
And it's earmarked for something specific, right?
Yes, for immediate construction costs.
Yeah.
Getting the Round Top mine in Texas going and finishing their magnet plant up in Stillwater, Oklahoma.
Incredible. So the government is basically paying for the factory floor. But that's just a fraction of the total. The big piece is the other $1.3 billion.
That's the loan.
And usually $1 billion in debt on a pre-revenue company would make me very nervous.
It should. And rightly so. I mean, think about the alternative. If USR walked into a Wall Street bank today.
With no revenue coming in?
Exactly. And asked for $1 billion. The bank would either laugh or demand something like 12, maybe 15% interest.
Let's just do the quick math on that.
Yeah.
15% on $1 billion is $150 million a year.
A year.
Just in interest. That's a death spiral. You're borrowing just to pay the interest.
It bleeds you dry. But this is where the strategic part of the deal comes in. This $1.3 billion is a senior secured loan, and it's coming through the GPS Act.
Which means the terms are better.
Wildly better. We are talking an interest rate pegged to the Treasury rate plus a tiny spread. It is incredibly cheap debt. And it's a 15-year term.
15 years. That is a very long runway.
It's huge. It gives them time to build, start production, and ramp up revenue long before the principal is a real burden. It totally changes the company's risk profile.
So free money to build the factory and super cheap long-term money to run it. It sounds like a sweetheart deal, but there's always a catch.
There is always a catch. And this is where the story gets really interesting. The government isn't just a lender here. They are stepping in as an owner.
Right. The equity stake. This is the part in the report that really made me sit up.
As part of the deal, the U.S. government got 16.1 million shares of USR stock, plus another 17.6 million warrants. So when you do the math, Uncle Sam now owns about 10% of the company.
Okay, so let's play devil's advocate. If I'm a shareholder, my piece of the pie just got a little smaller.
Yeah.
That's dilution. Why am I not mad about that?
Well, in a vacuum, yeah, dilution is bad. But you have to weigh that against what you're getting. And what you're getting, according to this analysis, is what they call a poison pill.
A poison pill. So like a defense against a hostile takeover.
Exactly. Think about the geopolitics. This sector is famous for predatory M&A. State-backed companies from other nations have a history of buying up promising rare earth juniors just to shut them down.
The old catch and kill strategy.
Right. It's a real threat. But now, imagine trying a hostile takeover of USR. You have to go through a shareholder vote where the U.S. Department of Commerce holds a 10% blocking stake.
It's impossible. It's the ultimate bodyguard. And I guess it scares off short sellers, too.
I mean, who wants to bet against a stock where the U.S. government is a top 10 holder? It removes a huge layer of risk. You're not just in a mining stock, you're in a national security asset.
So the government is all in. But, government deals can be slow, the market can be skeptical. But The report highlights something that happened almost immediately after this news broke that kind of validated the whole thing.
This is the part a lot of people missed because the $1.6 billion headline was so loud. But for the pros, this was the real signal. Almost immediately, the company locked in a PIPE deal.
A private investment in public equity.
For another $1.5 billion.
So, just to get this straight, the government puts up $1.6 billion, and Wall Street immediately steps in and basically matches it.
It proves the smart money, the big institutions, they agree with the government's assessment. They saw the deal and they doubled down. But the most important detail isn't just the amount, it's the price.
Okay.
These institutions bought in at $21.50 per share.
And why is that specific number, $21.50, so critical?
Because it creates what we call an institutional floor.
The floor.
These big funds, they did months of due diligence, they modeled everything. They decided that $21.50 was a fair price where they could make a lot of money.
So, psychologically, if you're a retail investor and you see the stock price drifting down towards, say, $22,
you can be reasonably sure those big funds are going to step in and defend their position. They're not going to let it go under without a fight. It creates a safety net.
That's huge. Okay, I want to pivot to the why.
Yep.
Why this company, usually when we talk rare earths in the U.S., the name that comes up is MP Materials.
Sure.
They're the big success story. Why not just give them the money? Why USR?
This is where we have to put on our chemistry goggles for a second. The media treats rare earths like it's one thing, like gold, but it's actually 17 different elements.
Right.
And there's a massive divide between what we call the light rare earths and the heavy rare earth.
Light versus heavy. What's the application difference?
So MP Materials is a fantastic company, but their geology is overwhelmingly rich in light rare earths, specifically neodymium and praseodymium.
And DPR, the ton twisters.
Right. Those are the workhorses for EV motors.
Tesla's wind turbines.
Exactly. It's a huge commercial market. MP Materials owns that lane in the U.S.
So they power the green transition. That seems pretty strategic. Why isn't that enough?
It's strategic for the economy, but not for the highest levels of national defense. USA Rare Earths deposit in Texas is geologically unique. It's rich in heavy rare earths.
Okay.
Specifically two of them, dysprosium and terbium.
Dysprosium and terbium. And why does the Pentagon care so much about those?
Heat. It all comes down to heat. Light rare earth magnets are powerful, but if they get too hot, they lose their magnetism. They fail.
And if you're a hypersonic missile or an F-35 fighter jet?
You're operating in extreme heat. You cannot have your guidance system fail when you're going Mach 5.
Oh, I see.
To make a magnet that can survive those conditions, you have to add dysprosium and terbium. They provide heat resistance. And right now, the processing of those heavies is almost 100% controlled by China.
So there was a strategic gap. We could make EV magnets, but not missile magnets.
That is it, in a nutshell. The report identifies USR as the only scalable domestic solution for these mission-critical heavy elements. MP solves a commercial problem, USR solves a national security problem.
That makes so much sense, and it leads to this financial transformation. The report uses a metaphor that I thought was really powerful. It says, investors are buying into the Lockheed Martin of mining.
It's a heavy comparison, but it fits.
How so? I mean, Lockheed is a stable giant. Junior miners are? Usually not.
They're not. They're usually burning cash, high risk. But you bridge that gap with the balance sheet. Before this deal, USR was a classic junior miner.
The Valley of Death.
Exactly. But now, look at the liquidity. The report estimates the total cost to build everything out. The CapEx is about $2.2 billion.
Okay, $2.2 billion.
And with the government's $1.6 billion and the private sector's $1.5 billion, they now have about $3.1 billion in liquidity.
So, quick math. That leaves them with almost $1 billion in cash after they pay for everything.
Correct. They are fully funded through to production in 2028 with a massive cash buffer. The risk of bankruptcy, it's effectively zero.
That's unheard of for a company at this stage.
It is, and that's the Lockheed comparison. Lockheed doesn't worry about making payroll. They have government contracts. USR now has a government mandate, government funding, and a captive customer in the DoD.
It's a utility model.
And that changes how you value it. You stop valuing it on speculation and start valuing it on reliable, long-term strategic importance.
So let's talk value. The stock price today. Where is it relative to that $21.50 institutional floor?
As of this report, it's trading around $26.35.
So it's up, but it hasn't gone parabolic.
Not yet. It's hovering. But analysts have been re-rating it. Most of the new targets are in the $35 to $40 range.
That's a pretty healthy upside. But we need to be realistic. This isn't a straight line up.
Never is. And this is the bear case the report points out. We have to remember, commercial production is still 2 years away. 2028.
And in the stock market, 2 years is an eternity.
It is. So during that time, you're just going to get construction updates. We poured concrete, we installed a pipe. That can be boring for the market.
And bored investors sell.
Exactly. You're likely to see a pop and drop, the excitement fades, the price drifts. The report specifically warns about volatility and points to a technical support level at $24.50.
So $24.50 is the line in the sand.
If it holds above that, the long-term trend is good. If not, we might retest that institutional floor. But the takeaway is patience. You're buying this for 2028, not for next Tuesday.
It's an investment in infrastructure, not a lottery ticket.
Precisely.
So pull this all together. We have the U.S. government stepping in with an unprecedented $1.6 billion. They take a 10% stake, blocking foreign interference.
Right.
We have the smart money, matching that bet, creating a price floor. And it's all because this one company has the specific rocks the military absolutely has to have.
That's the whole story. The U.S. government decided to buy an insurance policy against China's dominance in heavy rare earths. And that insurance policy just happens to trade under the ticker USR.
It's a fascinating case study. I mean, it's so rare, no pun intended, to see public policy, defense, and the stock market blur together this aggressively.
It really is. And it raises a much bigger question for everyone listening. For decades, the U.S. government mostly let the market pick winners. But now, they're not just regulating. They're becoming a top 10 shareholder.
It's a different kind of capitalism. More managed.
It is. And if the government is now picking winners with its own checkbook based on national security, what does that mean for other strategic sectors? AI, biotech, quantum computing.
That is a provocative thought. Are we moving to a world where the best investment strategy isn't analyzing a balance sheet, but just following Uncle Sam's wallet?
Don't forget to like, share, and subscribe for more.